Hello, I'm doing an audio check. Can you guys hear me? If you can, just type anything in the chat, please. Okay, okay. I guess the audio is working, video is working. Let us start today. First of all, I'd like to welcome everybody to today's webinar, where I'll be teaching you the strategy on how to use the indicator, the MACD indicator, which is the moving average convergence divergence indicator. With you today, I'm the Chief Market Analyst for One Trading Markets. My name is Gabi Dahtou. I am certified technical analysis and fundamental analysis and risk management and investing 101. So today's indicator is very important. A lot of people actually use this indicator, including myself, while I trade, because it uses a double or triple verification method, which we're going to go through together. Now, on the right of your screen, in the bottom, there's a question mark with a bubble around it. So if you have any question during any time in the presentation, please just write them down, and I'll happily explain everything to you. All right, so let us begin here the slideshow. All right. So these are going to be the webinar's content today. We're going to talk about what is the MACD, the different parts for the MACD, and the math behind it, how to use the MACD in your trades to identify buy and sell signals, uh, mainly using crossovers, histogram, and divergences. Okay, let us start. So what is the MACD? So the MACD is a trend following momentum indicator that shows you the relationship between two moving averages of a security price. Now, if you guys remember in the last webinar we had, we basically explained what is a moving average, which basically it's a line that shows the average price of a certain security or a stock or a crypto, or whatever market you're actually trading. So a momentum indicator basically is a technical analysis tool that allows us to determine the strength or weakness of a stock price movement. So what the MACD does, it shows us the strength of the movement. So let's say if a market is moving bullish, so it's moving upward, it's gaining more momentum. So the MACD shows us that the market is gaining more momentum, which will cause the price of the stock, for example, to gain even more value. Now, the typical setting for the MACD are 12, 26, and 9. These are basically the mathematical part. We will go through them in a second. They're really easy. You don't really need to understand, like you don't really need to do them anymore, because most of the platforms, or actually probably all the platforms, actually use these settings. So they're like pre-registered into the system. You don't have to do anything for them, but it's good to know where the numbers come from. So these are the different parts of the MACD indicators. The MACD indicator looks something like this. Let me get my laser pointer. So it looks like something like this. So we have four major parts for the MACD indicator. The first part is called the signal line. Then we have the MACD line. Then we have the zero line. Then we have the histogram. Is there any questions so far? All right, moving on. Then let's start talking about the different parts of the MACD. So let's start with the zero line. So here is the zero line. Like they said, it's the line dividing the MACD. So the zero line is where the MACD line and the signal line move around. So notice on the drawing right here how the MACD and the signal line goes up and goes down around the zero line. So the rule here basically, and this is your first indicator to know if the market is bullish or bearish. So if the MACD line is trending or trading above the zero line, then it means it's a bullish market. And if it's trending below the zero line, then it means it's a bearish market. Let me show you here with a real life example. So if we go to TradingView, which is the main platform that technical analysis use, give me a second. on. Okay, it's lagging for some reason. It's lagging for some reason. I don't know what's going on. Hold on. Trying to fix it real quick. Let me see if there's a task for it. Sorry for the delay. Here we go. There's a task for it. We close this and did the task. All right, here we go. I do apologize for the delay, but technical problem do happen sometimes. So as you see here, this is the gold chart versus the US dollar on a 1 hour time frame. So each candle represents 1 hour. These are the moving averages that we learned about in our last webinar. So if you guys remember, we talked about the exponential moving average, which is basically reacts faster with the market. So if the market is moving up, the exponential moving average reacts faster. And the MACD line is in the bottom right here. So let's make it bigger. This is the market. So notice here how the MACD and the signal are moving up. And notice how the trend is moving up. So basically the MACD is following the trend. So if the trend is moving up, the MACD is going up. Notice how this is the zero line, and notice how the MACD and the signal line are above the zero line. So you see zero here. Basically means that the market on a 1 hour time frame for the gold versus the US dollar is still bullish. So we do anticipate that the market will gain more value. And this is how the MACD, the basic of the idea, the indicator MACD works. Let's go back to our webinar and go forward. Now let's talk about the MACD line. Okay, so the MACD line comes from the 12 and 16 section. So if you guys remember a second ago, I told you that there's the settings, there are 12, 16, and 9. So what is the 12, 16 section? So the MACD is highly dependent on moving averages strategy. So for example, if we calculate the moving average for the market, the 26 moving average. So we're calculating the moving average of the last 26 candles. For example, here, gonna make it easier for you. All right, so the moving average, this is the moving average. So if we set the settings to 26, okay? And it's the blue, dark blue line. So it's calculating the average price for the last 26 candles. And it's giving us the exact price. So what the MACD is, where does this blue line comes from, the MACD line? It basically comes, if we calculate the 26 exponential moving average, then we subtract it from the 12-day moving average, we get the MACD line. So if we have here, let's add another moving average, and let's put 12 here. And let's make it yellow, for example. So if we subtract the 26, which is the dark blue, from the yellow one, we get the MACD line. So that's the math behind it. You don't need to remember it because, like I said, in any platform or any trading application, it's going to be like this. The default setting for it is like that. Like notice how the MACD for me, I just open it, for example. Let me show you. So the MACD, and it already shows me the setting here, 12, 26, and 9. But it's good to know where the information come from because we want to understand the strategy very well and not miss a thing. All right, let's go back here and go to the signal line. Now the signal line gets plotted from the 9 section. So it's basically a moving average of the MACD line. So what it aims for to actually smooth the price data from the MACD and give us the buy and sell signals that we use. For example, I mean, this is why it's called signal line, of course, because this is where we get our buy and sell signal. So if we look at our trading view, so the orange line comes, it's a moving average for the MACD line. I know this is a lot of theory right now, but when you guys see it, how we're gonna use the MACD on a real life example, you're gonna be feeling like, oh my God, this indicator is so good, because it really is. So The orange line, which is the signal line, comes from the MACD line. It's a moving average of the MACD line. Now let's go to the histogram, which is what you see here in the bottom. Get my laser pointer. In the bottom, you guys see these green lines and red lines? This is what we call a histogram, okay? So the histogram's job is to show how soon the MACD line and the signal line will cross, because from crosses, we will have buy and sell signals. So when the distance between the MACD line and the signal line is far, the histogram gets bigger. Notice here, for example. Notice how the lines are really big, and notice how the distance is big between them, and it's getting bigger. But if we look at here, for example, on this small size or even this small size, notice how the bars are small and the MACD line and the signal line are getting closer to each other. So it basically, this is what I mean by a double verification or a triple verification system. So you're watching the market. First, you notice the histogram, which gave you your first indication that the market could be crossing over. It could change from a bullish to a bearish, from a bearish to a bullish. Then you get your crossover, which is your second verification that the market is actually changing direction. And that's how the MACD works. It basically measures the temperature of the temperature of movement of the trend before it happens. So it gives you an early signal to enter a trade and exit a trade before it actually happens, to maximize basically your profits and minimize your risk. So when the MACD line and the signal line gets near to each other, like we said, the histogram gets smaller and smaller. So now we're going to learn how to use this indicator in our trades. Before we start doing that, I guys like to ask you if you guys have any questions. I know that was a lot of theory. If you have something that is not clear, please let me know in the questions and I'll be happily repeat it for you. Yeah, 100% sure. Let me show you again. So zero line, correct? Yeah, okay. So like I said, the rule with the zero line is if the MACD line is trading above the zero line, then the market is considered bullish, which means the market is gaining more value. And if the market is below the zero line, then the market is considered bearish. For example, here, we look at here. Notice how the market was, let's go with this trend like this, so you guys can see a better view, okay? So the market was bearish here because the MACD line is below the zero line. But notice how it started to gain more momentum. And as soon as it crossed above the zero line, notice this very big candle, which basically you gain from the 1770 in the gold price, the 1780. That's that's 8 points, 10 points, sorry. That's really huge profit, especially if you're trading like on bigger lots. So when they cross, we understand that the market has turned bullish. So we bought here, for example, and the market kept going bullish. Even though the MACD dropped, but it didn't drop below the zero line, it is still considered bullish. And notice how we gained even more momentum and more momentum until we have the point where the MACD crossed below, and this is the bearish sign, and the market dropped. And here again, the MACD crossed above, which is around here. The market is gaining more momentum. So for your question, your other question, it works on any time frame. Yes, it does. For example, this is the 1 hour chart. Let's look at a daily chart for the same product, for example. We can look at any product, it doesn't matter, but same thing. Notice here, the market has crossed here below the zero line. So it's giving us the indication that the market is turning bearish. The market has dropped, kept dropping. We got more momentum here. The market crossed here around this area. We know that the market has went into a bullish state, and look at the gain that the market has gained in this period of time. Everything clear? Okay, if you guys have any questions, just type them more. Let's continue our webinar. So how do you use the MACD in your trades to identify buy and sell signals? So we have three major ways: crossovers, histogram, sorry about that, histogram, and divergences. We're going to explain each one, and we're going to see real life examples and pictures on how this works. So let's start with the crossovers. You guys probably understand what a crossover is, but in case you don't, crossover is when two lines crosses above each other. Simple as that. And since the MACD has two lines, he has a signal line and the MACD line. So we use the crossovers between them to identify buy and sell signals. And we have two golden rules here. So when the MACD line crosses above the signal line, then it's a buy signal. So a bullish crossover. When the MACD line crosses below the signal line, then it's a sell signal or a bearish crossover. For example, let's look at the picture here. This is a chart for the Ethereum versus the Tether USD on a one-day time frame. So notice how they're getting closer to each other. Still bullish, but nothing major yet. Notice here how the market dipped, then the MACD crossed above the signal line, indicating a buy signal. So for example, if we have bought, sorry, I don't have my pointer. Yeah, sorry, I was talking about here. So here is where we have our major buy signal. So if we bought here and we rode this wave all the way up, notice how the market actually moved from 2,400 to 4,000. That's huge profits. So when do we consider that the trend has ended? We consider the trend has ended when the MACD line dips below the signal line, and that's when it's time to sell. And notice here, so after the trend has started to drop a little bit, we noticed a crossover. We know that it's time to sell. So we sold here around the 3,800, and we rode this wave all the way to here, for example. One thing you gotta remember in trading, you don't only make profit by buying, you also make profit by selling, because you're selling one security or one currency versus another. So your currency is gaining more strength versus another currency. For example, in our example here, Ethereum, Tether USD. So Tether is basically like a stable coin. It represents $1. So when we bought here the Ethereum, okay, we bought Ethereum. It went back up. So it's worth more Tether right now. So we gained roughly, if we bought one, we gained $1,400. Then if we sold here and rode the wave down, our money is now even worth more Ethereum because we made money from the buy signal. So you make money going up and going down, going up and going down. But a lot of people, because misunderstand this and think you can only make money when the market is going up. That's completely wrong, especially in trading. Like, it doesn't work like that. So for example, here, notice here as well. This is the major buy zone. So we notice that there are some other crossovers, but notice how the movement isn't really too big because the histogram is not showing a lot of momentum. Like we said, that the histogram shows you how much momentum the trend is gaining. So here we notice that the market has started gaining more momentum, and we got a buy signal right here, which is around here. The price was around 2,000. We bought here, we rode this all the way. This is where the crossover happened. We sold here, which is 3,600. So we made basically $1,600 from buying one Ethereum, for example. Same happens here. This is our main sell signals. Hold on, I'll answer you for that. This is where our sell signals happen, and we rode the wave down. So let me answer your question. How to not confuse with fault crossovers. Okay, so this is what I meant by a double verification system, which is going to be our next here, the histogram. I will show you how to use the histogram with the crossovers to confirm what you're doing. But one thing to remember, nothing in trading is a 100% certainty. Nothing. Because we're talking right here of a pure technical analysis point of view. Like, so we're seeing the data, we're seeing the money going in and going out, and we're analyzing and predicting how the market is moving. But for example, if something fundamental like in the news happens that causes lack of Ethereum, or maybe something like the inflation in the United States or something like that, this could also affect the market. That's why I always say nothing is 100%, but these will help you minimize your risk while maximize your profits. Before we start with the histogram, I would like to show you a couple of examples that's going on real life charts. So this is the 15-minute chart of the the gold. We can try something else. For example, like we can see Bitcoin if you guys are interested in Bitcoin USD. Here we go. Let me delete all of this. So this is the 15-minute chart. So each candle is 15 minutes. So notice here, this is the last 1 hour. 1 hour ago, we had a bullish crossover, which started here. Let me zoom in. Okay, it started here. So on this candle, where the price closed where around $47,000 and $300. After the bullish crossover happens, notice how the market already is moving up, and it actually reached $47,700. Now, this is not a lot of profit because we're looking at this on a 15-minute chart, but if we look at this from, let's say, a 1 hour chart, for example, on the 1 hour chart, we see the market is still bearish. And this is where the sell signal came on this candle. So the candle closed at $49,634. So we sold here and we rode this wave, which we're still riding. It is still bearish until the market reached 47,500. So we basically made $4,000 in this move alone. Same happens when we go to a higher time frame, which is like, for example, the daily time frame. Where's the major sell signal? It happened here. You see how it happened here? It got close here, but the crossover didn't happen. So this is where we got our signal that we need to sell. The market was at $64,000. So if we sold here and if we listened to the MACD indicator and we sold here, we could have made from 64,700 all the way to 47. So we're talking profits in like $15,000-$20,000 in a matter of, this is for example like 15 days. This is basically 2 to 3 weeks. So when you look at the MACD, always try to look on a 1 hour chart, for example, if you're trading on an hourly chart, but also make sure to look at a daily chart and a 15-minute chart. See how the market is moving to minimize your risk. But that's how you use crossovers in general. Now let's move to the histogram part. Let me explain how the histogram works. So we use the histogram as a way to predict when a reversal will occur. So we know that the MACD is a momentum indicator, like we said. So it can show us when the sell pressure is low. So that means it might be a good time to buy, or the other way around. So when the buy pressure is low, it's a good time to sell. So the histogram basically can tell you when your long position, which is basically when you're buying, is about to run out of steam. So basically it helps you in multiple ways. The first way is it tells you when it's a good time, like it looks like soon enough, we're gonna have a crossover. So it's a good time to buy. And it helps basically tells you when your position when you bought is losing momentum. So maybe now it's a good time to actually get out before you lose some money, some profit. For example, let me show you here. So notice how the histogram was moving very, very low bars here. And notice how these small red ones showing very, very, very weak sell signals, basically, like sell pressure. So it's telling us that soon we will probably have a crossover. Now, let me explain how this in a different way. If you notice here, when this ends, you're always going to have a crossover. When this ends, you have a crossover. When the red ends, crossover. When the green ends, crossover. And that's how basically, so it gives you an early sign that a crossover could be happening soon. And this is what I mean by a double verification system. So you have your first sign, a crossover could be happening. Then you have your crossover, then you verify 2 times that the trend is changing. So here we notice the pressure, the sell pressure is very low. We notice this could be a good buying opportunity. We waited for the crossover. Okay, we waited for that. We saw the crossover, then we bought. So we bought here, which is around $2,400. Then we rode the wave to 4,000. Now notice here on the histogram, it started to lose momentum before the bearish crossover happened. See, like we were still here. Sorry, we were still here, and we no sounds. Can you guys hear me like this? How did we lose sound audio? Can you guys hear me? Oh, okay, you can. Okay, good. So we notice here that the momentum is getting lower. So it's an early sign that our bullish movement is coming to an end. So we basically sold here before the crossover even happened. The crossover is a basically confirmation for our first signal, which is the histogram. Notice here, it dropped. Okay, good. Do you guys want, I'll repeat it just in case. When did the voice cut off? Did you guys hear about the histogram and how the momentum is actually moving, like strength and pressure and buying pressure? Sell pressure, buying pressure. No worries, no worries. I'll repeat it. Sure. So, like I said, the histogram is an early sign to when a crossover will happen. So notice when we lost momentum here, we knew a crossover is about to happen. It gave us that the sell pressure is very low. The red one is the sell pressure, the green one is the buy pressure. It's very low. So we could be seeing a crossover happen. Then we saw the crossover, which was our second verification that this is a good time to buy. Then we bought here and we made this amount of profit. So the second use of histograms is basically it tells us when our buying or selling position, like we bought here, for example, is losing momentum. So the trend could be changing from bullish to bearish. Notice here how we started losing momentum. Notice how the bars are getting smaller and the distance between the MACD line and the signal line is getting closer, even before the crossover happened. So it gave us an early sign that a crossover will happen soon. So instead of actually selling around this area, which is basically the 36,000, we started selling over this area, which is the 4,000. So we kind of saved like $400. This is what I mean by it helps you understand the trend better. It gives you early signals before the market actually reacts to it. If everything clear so far, I'm going to show you like real life examples right now. We'll see how they work. But do you guys have any questions about this? Okay, let's move to the live example and see how it works. So this is the Bitcoin US dollar chart on a 1-day chart. So one candle represents 1 day. Okay. For example, we want to analyze this move here. Then we want to go here and see what's going on. So notice on the histogram, this is the sell pressure, the red one. Okay. We notice on a couple of phases that it's getting lower and lower, and that we're losing more momentum by the day. So we know it's already telling us that a bullish crossover is due to happen. So as soon as we saw the bullish crossover, which is here, okay, we know this was a very good place to buy. So we bought here. This is where the bullish crossover happened. When the Bitcoin price, open price was $41,529. And we rode this wave. We rode it all the way to $66,000. Now, one thing you gotta see is here and here. So the bearish crossover only happens around this area, okay? But if we look at the histogram, we notice that the histogram is losing momentum, which is basically an early sign that the price could be dropping soon. So instead of selling here, we actually sold here. So instead of selling at 61,000, we sold at 66,000. We basically made $5,000 worth of profit if we're trading, like, for example, one piece of Bitcoin. And that's how the histogram works. This is the double verification system. And sometimes you can get a third verification to actually understand the market and know for certain that it's a very high likely that the market will change. And this is what we gonna learn now next. And this is what we call a divergence. So what is a divergence? A divergence is when the price of the market, asset, stock, currency, whatever, is moving in the opposite direction of a technical indicator. So if the market is going up and the indicator is going down, something is wrong. We know something is about to happen. So these are the main types of divergences. There's only two. There's a bullish divergence and there's a bearish divergence. Bullish divergence is when the market price is going up, but the MACD is the market price is going down, but the MACD is going up. So the indicator is telling us that we're gaining more upward momentum, but the market is going down. This gives us an even earlier sign that the market is about to pick up and jump and fly to the moon, basically how they say in cryptocurrencies. A bearish divergence is when the market price is going up, the market's going up, but the MACD is going down. So it's basically telling us that the market is about to lose value. Now, let's look at these real life examples. This is from the Ethereum Tether as well. This is on a one-day chart here. So notice here how the market is moving up, correct? But the indicator is moving voice. Can you guys not hear me? I don't know why I'm losing voice. I'm not pressing anything. Can you guys hear me like this? This is weird. If you guys, okay, you guys can hear me. I'm just checking with somebody. He just said voice. Is my voice clear to you now? Think you could be losing connection or something, because like, yeah, I have a lot of people like saying it's like it's working. So I don't know if you're having technical issues. Okay, one second. I think it's fixed now. Like, yeah, I think you should be able to hear me now. I don't know what's happened. I think I see your connection is actually losing some kind of buffer or something. It's buffering for you. But that's like technical issues from your part. Anyways, let's continue here and talk about the divergence. So market going up, indicator is going down. This gave us an early sign that the market is about to lose value. So notice here, the divergence is happening before the crossovers and before even the histogram. So this is where divergence come as the third confirmation. So the early sign came as a divergence, but divergences are rare. They don't always happen. So this is what I meant at the beginning when saying the MACD is a double verification and triple verification indicator. So sometimes you get the triple verification, sometimes you get the two. If you get the triple, then you can know first, like you can have more confidence in your trade because you know you have three different things confirming that move. So the MACD, the market's going up, the divergence is going down. We noticed here at the end of the divergence, this is where the market happened. This is the signal that we're talking about, the sell signal. Before the histogram started losing momentum, before the crossover, we noticed a divergence. We sold here. We got our second confirmation, which is the histogram. We got our third confirmation, which is the crossover. Then we sold here. We sold around the 3,800, and the market dropped down to the 2,400 until it got a bullish crossover again. Now, if you look at this big divergence, divergences can be really big and can be very small. Preferably, I like to look at divergences on a 4-hour chart or higher. The higher, the better, in my opinion, because the move will be more significant in the market. So for example, here, notice how the market is going down. But on the divergence, on the, MACD, the market is going up. Even though we have a couple of signals here, like we have a buy signals, we can actually count on these. Like we can buy here, sell here, buy here, sell here. Sorry, buy here, sell here, bullish, bearish. But we're talking about the major trend. You know what I mean? Because even in a bearish, like I said, bearish trend or bullish trend, you can make profit. Like I can always make profit buying here and selling here, buying here and selling here, buying here and selling here. But this is not the major trend. We're just making profit on the oscillation of the market. But if you look at the trend as a whole, we notice that the market is losing value over time, which basically is our major trend. So this is where the divergence has ended. Before the crossover happened here, the histogram gave us signals as soon as the divergence has ended, and we bought here. So first confirmation is the divergence. Second confirmation is the histogram. Notice how we lost momentum. We're gaining more momentum, great momentum. Notice going up, up, up. And we have the bullish crossover here. So if we bought here, we could have ridden this entire wave all the way back up, made good profit until we have a sell signal here or here. So you could have sold here, for example, or you could have sold here. And that's how divergences usually work. Let me show you how this works on a real life example. Let's see if we can catch some divergences. So this is the Bitcoin price, for example, okay? Let's see if we can find any divergences here. I think that is one. Yeah, that is one. Let me show you here. This top, this is where the trend is going up, and here. So the direction of this, let me actually make it brighter and yellow, for example. So notice how the price here was lower, the price here is higher. But if we look at the indicator, we go at the same place, the price here and the price here. So the market is going up, but the indicator is going down. Before this move happened, we noticed at the end of the divergence. So when do we tell when the end of the divergence is? By confirming with the histogram and the crossover. So if we go even closer, see the divergence ended before the crossover happened here. Before the histogram ended and the new wave, the new trend started. So first sign, second sign, histogram losing momentum, turning red, going bigger. Third sign, the crossover. The crossover is here, sorry, I'm showing you on moving averages here. There we go. Crossovers are here. We're gonna make it clear. Like this. This is where the crossover happened. So the crossover happened here. The divergence ended here. So we had 2 days to prepare for a bearish sign. This is what I mean by an early sign. It's really good. Like MACD is one of my favorite indicators because it really helps you understand how the market is moving, how the momentum, the buying pressure, the selling pressure. So if we sold here, for example, before the crossover happened, or even if we waited for the crossover to happen, from 56 points, $56,600 all the way to the first buy signal, which is around here, 34. That's almost a $30,000 difference in one move. Here was the buy signal. Notice how the market is going up. It's oscillating here, which is basically a consolidation phase. And the market kept going by buy signals, sell signals, histogram movement. Any questions so far? I mean, we're kind of almost done. Was anything unclear in the presentation? Exactly. So it works like a thermometer where you're having multiple signs to confirm it, to confirm the movement. Yep. Let me see. Which is good time frame or candle to show it 4 hour or 1 day? So which basically chart would you like to use the MACD on? So the MACD, you can use it on any type of chart. You can use it on 1 day. You can use it on 1 minute, for example. See, buy and sell signals, 15 minutes, 30 minutes, etc. But for the divergences, the longer or the bigger the divergence, the better the move. So if you have a divergence on a 15-minute chart, the move could be jumping from like 45,000 to like 44,660, like 40 points. But if we have a daily divergence, you know that the movement will be way bigger and the profit will be bigger. Next question. What are other best indicators which can be combined with the MACD? So with the MACD, I would like, this is what I usually use, is the relative strength index indicator, which I am preparing a webinar on it soon. I'll publish it on my Instagram for sure. But it's probably gonna be after New Year's Eve because I am traveling right now for work. So after New Year's Eve, the webinar will be completed and I will publish it on my Instagram so you guys can register for it. It's also gonna be free. I'm gonna teach you how to use the RSI. With these, you have more indicators to understand the market movement. So how do we set MACD on the trade platform? Sure. So this is our trading platform. You can always use the trading view, which is basically the analysis where you want to analyze. Sorry about this. Let's go to this one. So if you go to your indicator tabs, which is here, if you go to trend, there's moving averages, there's other averages. So what we want the MACD. The MACD is an oscillator. We have the MACD here. Typical settings, see? You don't even have to click anything. It's already setting 12, 16, and 9. It comes out. Histogram, MACD line, and the signal line. I already have it presetting, that's why. Do you recommend using the MACD for stocks as well? 100%. The MACD you can actually use on stocks, cryptocurrency, forex market, commodities like gold and oil. But remember one thing, always remember this. We're using technical analysis on the charts. Okay, this is all technical analysis. On stocks, remember, fundamental news also affects. So if the company is having some kind of board meeting, that could affect the stock price, that could plummet the stock, which basically could reverse your indication for the market. So like here, we're just talking technical analysis. When you want to analyze well, understand the market, if you're looking for stocks, for example, because there's a lot of news coming from stocks. So look at the fundamental analysis of the company. Look at their revenue. How much money are they making? How much earning per year are they doing? How much profit per share do they have? Is there any big news? Is the company doing like some kind of collaboration with another company that could increase their value? That will only support your analysis. But the MACD is a pure technical analysis tool. Any other questions? Okay. So today with you, my name is Gabi Dahtou. I'm the Chief Market Analyst from One Trading Markets. This is my Instagram where I post daily updates for Forex market, commodities market, and cryptocurrencies, NFTs, etc. This is my Telegram where I post a detailed analysis for markets. So for example, I analyze one market a day. For example, let's say I'm analyzing gold. So in details, I explain everything in my trading view. My Instagram is more for social media. Different news, different fundamental news, something happened big in the world, I post there daily. So you guys should probably follow me. And this is where I post usually that I'm having a webinar soon. Thank you all for watching this webinar. I hope you guys learned something from here and learn how to actually apply the MACD in your trades. And I'll see you guys next time. So next time will probably be after New Year's Eve. I'm gonna be explaining the RSI indicator, which you can combine with the MACD to have a better signal. All right, you guys have a good one.